Non-farm payrolls last week, the surge, not a bad number. University of Michigan confidence numbers or inflation numbers, so inflation on the rise. That is a bit of a concern there. And euro inflation, much higher than expected. German rates are up around about that 2.6%. Very interesting there. We'll dive a little bit deeper in there. Oil on the move higher. Something we suggested a little while ago was going to happen, and technically it looks like it's got a lot further to go, so just be careful on that one. China inflation rate year on year and month on month continues to show sluggish signs. Let's have a look first of all on what's happening, I guess, in terms of the US, what's happening with interest rates, but more importantly, what's happening with Trump and Trump's policies. And I think this is something we're worth a bit of a deeper dive in, because as we know, or as we're starting to know, Trump's been announcing the tariffs that he's going to implement to safeguard Make America Great Again. Now, this is a little bit of a concern, and I guess the reasons why it's a concern is that we still don't know to the extent of what he's going to increase the tariffs. Now, we've got Penny Wong, our Foreign Minister, heading over to the US the next couple of weeks for the inauguration of Trump, and she's a bit nervous, and on her agenda is making sure that we've got a favoured position with the US. So I think if anything there, when we look at it, that's an unknown. I think that's actually paving the way for weaker equity prices. Now, just to give you a guide, what's happening with the policy. I think they come in on the 20th of January 2025. That's the new policies. He wants to implement a 25% tariff on all imports from Canada and Mexico. He's got an additional 10% tariff on Chinese imports, as that will also come into effect. And I guess also he's just basically saying he's going to impose another 20% on everybody else. Now, that puts prices higher. That's also could be inflationary as well. And that's something to be guided by for the Fed. Remember also, when it comes to China, Trump's turned around and said quite a few times that because of China, there's that disparity. And we focused a little bit in the report on that. And you'll be able to see the difference in manufacturing between the US and China. The US manufacturing just seems to be a dog. Under is 0% growth, and when you look at the China's sort of looking up there plus 5%. So I think Trump's trying to bring that in, make America great again, and as a result of that, those tariffs will certainly help the domestic market, but it also might push prices a lot higher. So I think that inflationary thing is something that one has to be aware of, and I think if anything, remember, Trump is not adverse, and remember he's also he's got the Senate and the House and the Representatives, so he actually controls all that, so he can put the tariffs through. And he's also thinking of putting the International Economic Emergency Act, and if that's the case, well, he's got the power to actually put these tariffs up. Quite interesting. When you look at China also, I suppose China in itself, we've seen the tariffs that the US has put in there. Most recent, that's happened since 2018, where they're trying to make this a level playing field in terms of imports into the States. But what you'll find is that more recently, there's been a 100% tariff on Chinese electric vehicles. So I think if anything there, these policies will be in play. Really, if you're a favoured nation, hopefully it won't be that bad. But for all those others, it might be a bit of a concern. I think he also has no doubt with the BRICS countries there, if they're going to pursue initiatives about moving away from the US dollar as a base country, he's going to suggest or slam 100% tariff on that. So, I think the equity markets there are a little bit concerned, as they would be, and we might see a little bit more weakness, but more on that a little bit later. Back in the US also, we had factory orders. The month-on-month continues to show weakness. This is not a really good sign, because once again, it plays into that balancing act that the Fed had. Remember, non-farm payrolls came in at 256,000. That is higher than expected. So with that, there's going to be some inflationary fuel there. So the Fed in itself is quite balanced, needs to be quite balanced. I think Trump will organise the tariffs to help the domestic economy. I think when you look at interest rates, they'll stay high because we've got a higher labour cost. So I think it's more of the same. I don't expect any quick movements over the coming months in terms of interest rates. Let's just leave them where they are. What's happening in Europe in terms of inflation? Because last week we did get a lot of inflationary data. And remember, the ECB has been lowering rates quite aggressively since they peaked. They're now about 3.15%. down from the high of about 4.5%. And that's all happened in the space of the last 6 months. Inflation is starting to creep up. Germany's preliminary data showed a rise of 2.6%, and the trend for the last 3 months has been that it has increased. The euro area, 2.5 the last 3 months. Inflation higher as well. So one of the problems that we've got with Europe at the moment, is that they're getting this inflationary push at the moment, which is an issue, and they've also got low interest rates. And they've got business sentiment, which is really, really poor. So that's going to present a stagflation style, and that's very hard to budge. Now, when you look at all the types of inflation, stagflation is one of the worst ones that you try to stimulate your way out of it. You just can't do it. And it can often end up in a malaise, which will just stay there for some time. So that's something to be notice about. I'll put you on notice there for the Eurozone, which is under pressure. But having said that, let's look at China. China's inflation rate, once again, not the best. So, the world's second largest economy is not performing that well. Inflation, once again, that disinflation now, when we've got potential stagflation in Europe, we've got disinflation in China, but that's more manageable because they can actually move on stimulus policies there to try and get things going. Remember, the real estate market there collapsed a couple of years ago. We're still feeling the effects of that. Mind you, it's been managed very, very well, so that's not a bad thing. So we do expect more to come from China in terms of its stimulus. PBOB, the People's Bank of China, have got a lot further to go in terms of what they can do. They're just taking it easy, and that seems to be the right policy. So I don't mind that. Now moving on, we've got this week quite a bit out there. I guess the most important thing is we've got US earnings. Session kicks into gear with majors like JP Morgan, Chase, Wells, Fargo, Goldman Sachs, all report their quarterly results. They'll clearly keep an eye on that. We've also got some key inflation data, CPI and PPI out of the States as well, which might link you, see what's said with the Fed in terms of their policy direction. China, we also get a suite of economic numbers from there, which is something we'll also keep on top of. And in the UK, we've got GDP, retail sales, and that sort of thing. So quite interesting.